Looking back at this year, what company do I feel has done really well and still has more to come? Potentially even the best growth company of 2017. I know, Amma. Hi guys, it's your favourite YouTuber again, Dami Solaru, and you're watching DS Learner Finance. Whoa. I'm here to talk about Amazon. I'm here to talk about Amazon, guys. Why does it keep making that sound every time I say Amazon? I don't mean like an Amazon tropical rainforest. I mean like Amazon, the company. Easily one of the best growth companies to have invested in at the beginning of this year, guys. If you don't know what Amazon is, then I suggest you get up over that rock that you've been living under. Because Amazon is a massive company, a massive online company which sell a bunch of products, from books to electronics, you name it, they sell it basically. Amazon is massive, yeah? Not massive, massive, okay? A big company. So big that Amazon, you know what, I just got to get used to this. So big that Amazon is one of the largest 500 companies in the whole of America. That's how big Amazon is. They have a market cap of roughly 573 billion pounds, a market cap that large, massive. And yeah, if that doesn't strike you as a large company, then I don't know what does, because that is a big market cap. Not only that, but they have a beta of 1.39. For those of you that don't know, beta basically tells you how tightly stock that you own or that you're thinking about owning relates to the market, and it's a measure of the volatility of that stock. So if a company has a beta of 1, that means it's just as volatile as the market is. But Amazon has 1.39 times that. So whatever the market is, Amazon would be in theoretically 1.39 times that in terms of volatility. Volatility is like a double-edged sword. On one side, it's really good because it means that you can make profit. So the more volatile a company is, the easier it is for you to flip it and make a profit upon it. On the downside, as you guys can probably have guessed, volatility can also mean that you can make a deficit. So it's a measure of yin and yang. But with that said, a beta of 1.39 is actually not that bad. It's a reasonable beta value. So yeah, that's a tick for Amazon. Cool. So we know Amazon's massive. We know that they're good. They're able to make us money. But what is the actual bad parts? 1, PE ratio. Amazon has a PE ratio. Oh, I almost had a heart attack when I saw this. Of 300. Not the movie. I'm not talking about, be honest, 300%, not 100, not 200, not 300%. I'm not talking about that. Like a beat, can you guys imagine? I can't even. A PE ratio of 300. That is massive. That is massive. You know when this, it just makes you want to jump. It's that big, guys. Just to put things into perspective, a company that I would invest in would have a PE ratio of around 15 to 25. 25 is pushing it, and 30 would probably be like that company has to have everything going on for it. Yeah, Amazon has 20 to 12 times that, guys. 20 to 12 times that. For those of you that don't know, PE ratio is the price per share over the earnings per share. And it basically tells you how profitable that company is. So if a company has a PE ratio of 300, it tells you that you have to invest in 20 to 12 times as much money to receive that same amount of profit as you would for a company that you would have invested in with a standard PE ratio of 15 or to 25. That's basically what it tells you. And the problem is, it's not even you get that profit, it's Amazon get that profit. So the profit that you get from Amazon is going to be an even smaller piece of the cut. So yeah, that's not really looking too good. But the real power in PE ratio is actually comparing it to its competitors. So one of Amazon's biggest competitors is eBay. Yeah, eBay's everywhere. Not as big as Amazon, but still big nonetheless. I looked up eBay's PE ratio. Could you guys guess what it was? I almost got a heart attack from this as well. It was 5.63. 5.63. Amazon is 300. So Amazon's really starting to look like an expensive company, because the PE ratio can be high in respect of particular markets, but looking at other competitors, Amazon is completely out into the space. Like, that's how big the PE ratio is. So it just shows that Amazon, to be honest, looks like an expensive investment from a profitable perspective. Now, to talk about dividends, which is probably one of the main sort of aspects to look on when it comes to investing in a company long term, is the dividends. Amazon, yeah, they don't pay any of it, guys. Amazon don't pay a dividend yield at all. So yeah, they're yet to pay people dividends. This can be seen as a bad and good thing. Bad because obviously we're not getting free money. On the flip side though, it can be seen as a good point, because that means that your Amazon has room to expand. They have room to increase their dividend. So maybe 2018 might be their year to start paying dividends. That might be another incentive to attract investors, more investors, to purchase Amazon shares, and therefore the share price could then escalate further. Finally, the market volume. Now this one is a biggie. Yeah, there is no point owning a stock which you can make a profit from, but the only thing preventing you from making that profit is that you can't sell your shares because it's illiquid. You need to make sure that the companies that you invest in are very liquid companies. Amazon does not have an issue with that because they are very liquid. On average, they have 2 to 3 million trades occurring every day. So yeah, you're not gonna struggle, guys. You're not gonna struggle to sell your shares and buy your shares, okay? Which is a good thing. Now moving on to your financial documents like the income statement, what I can say, guys, is that Amazon looks like a serious contender for one of the best growth companies to have invested in this year, 2017. I'll tell you why. Their income increased from 2015 to 2016 by 4. Not 1, not 2, not 3, not 4. 4, guys. Like, that is massive. But that's also a key indicator of a company that's a growth stock, when their income really grows. Because what it's saying is that the company is bringing in more and more revenue, and then eventually it'll come to a stage where that revenue starts to increase in terms of profit, and then that profit increases as well. So it's a good sign when a company has revenue increasing, but by 4 times, guys. That is massive. On the flip side, the actual profit that they keep for those years goes up and down like a roller coaster. Now that's not great, but the good thing is that they were all positive values, so they didn't make a deficit for the last 3 years. So that's a good sign that, okay, they know how to make profit upon the goods that they're selling. But it's just now you want your profit to replicate your income. So your income's going up, that's excellent, but your profit needs to go up steadily just as well. It shouldn't be moving up and down like a roller coaster. So that's one negative I would say when it comes to Amazon. So I've given you guys a little sort of overview of the financials when it comes to Amazon. Now let me tell you my take on it. First off, the P ratio is extremely high, but I would say that's counterbalanced because we're talking about a growth stock. Also, another good indication that Amazon is quite a good growth company is the fact that they just swallow up their competitors. They swallowed up a bunch of businesses, guys. They swallowed up so many businesses and actually rendered them like bankrupt. That's how big Amazon's getting, and they're just only expanded. Another thing I found out as well is that Amazon are starting to sell wholesale food. That's another form of revenue for them to open up. And like, I reel it back to what I said before, a biggest sort of sign of a growth company is not from the profit they make, it's from the income they make. Obviously you want to invest in a company that's making profit, which Amazon's doing anyway, but the main part is the income. Amazon is making their income flip year after year after year after year, and I can pretty much say this year will be their highest income statement so far. I can tell you that. But yeah, that's my take on it. I do feel Amazon is one of the best growth companies of 2017, and is only yet to come because of those reasons that I mentioned previously. So my question for you guys is, what company do you think we will be saying this about next year? Hit me up in the comments box below. And that's the end of my video, guys. I hope you liked my video. I hope you subscribe to my channel, and please share, because you know it's coming. Yeah, like, subscribe and share. DS Learning Finance. Whoa, 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 whoa. Bye.